Markets start year off with a bang and cryptocurrencies are under scrutiny. What's up, everybody? Welcome aboard to Bubba's Bottom Line. And of course, this is our weekly attempt to help inform you and keep you abreast of what's going on in the markets. And of course, we had last week one of the biggest up weeks in history to start the year off. And of course, we start now the 10th year of the bull market. Can it continue? A lot of things going on. A lot of things say yes, it can. Some things say no, it can't. But at the end of the day, we have to understand exactly what's going on and how to attempt to play the markets as they sit. It's not something that is easy. It's not something that we can look forward to, but it is something that has to be done as far as an overall view into what is happening with the markets and into the underlying footprints that the markets are leaving. So as we look back at last week, the first week of the year, and what did we see? We saw a market that was simply up every single day. Not even an attempt or a thought at selling off. And what we also saw was extremely light volume, which based on anything else, it doesn't matter. And I think one of the questions we always have to remember is, does it matter? And the answer is no, it does not matter, because at the end of the day, when the markets close and they mark your statement, that's where you stand. So let's not worry about some of the small factors that many of us try to outline to you, to pretend that actually means something, okay? Heavy volume might mean something on a certain move, but overall, what we've seen here is we've seen a reduction in a lot of the purchasing of some of the equities. Now, first of all, equities are down in the number of equities that there are. Many people have switched into ETFs. So you don't get as much natural volume to begin with. So the real question is, have the ETFs taken over the space of volume, and should that be natural in the lowering? Because volume has been falling for quite a while. So it's not something new. Now again, we had extremely light futures volume, which would be a concern. But again, we cannot fight what is happening and be convinced that the markets have to have a correction today, tomorrow, next week. We all know that they will. We all know that this time is not different, although many of the pundits and advisors would have you believe so. But when we come down to it, we know the markets will have a correction, but we knew the markets would have a correction when they were at 18,000, 19,000, 20,000, and now we're at 25,000. So there's no reason to say that tomorrow is the day that is going to be the start of it. The correction will come when it comes, and being prepared and understanding how to deal with these markets and trade them will be more important for you going forward. So I think one of the things that we look at is, yes, the markets were certainly up each and every day last week. Now, there was not a big demand. Now you had, first of all, understand that it was a holiday week. Now, what I mean by a holiday week is, a lot of kids were still on vacation from school, so a lot of people were still on vacation. So even though it was the kickoff of the week, when New Year's Day falls the way it did into the second week, if you know the school schedule, which is they get Christmas and New Year's off and don't go back to school in between, that means that New Year's Day is always going to fall for the next 4 years in between, which means that will be a quieter week in general. Now, we did have the Fed minutes come out last week, which were, the usual. Again, I don't put a lot of weight into anything that the Fed does. I think that they're wrong, but we'll talk about them, of course, in my commentary. But you had the ADP private sector jobs, which had a major increase of 250,000. But I think one thing we have to be concerned about with ADP is, they've been proven to not be that accurate. They've also been proven in the past to manipulate numbers. So again, I wrote last week, numbers never lie, only the people that report them do. So let's not worry about what the ADP number, the actual non-farm payroll job that came out on Friday was 148,000. Now, what does that mean? Well, it doesn't mean anything really. I mean, again, we can hear everybody talk about how great the jobs are. Again, I continue to say that I don't see this great jobs picture that everybody wants to talk about. I don't see this wonderful economic picture. But again, if you remember that the economy has nothing to do with the stock market, then you're one step ahead of the game. But the wage growth was a little bit better, but still not anywhere near enough of what we need to see if we're going to really see this improvement. Now, if you also tie into the fact that the stock market is usually a forward-thinking indicator, eventually they're going to meet up with expectations and price, and you will see that long awaited for correction, but trying to say when would be silly. Now, we've gone over almost 2 years. February 11th of 2016 was the dead low of the market. That was the day that Jamie Dimon from JP Morgan bought the bottom of the market. That was the day that Janet Yellen called Mario Draghi and Campbell from England, and they magically the markets ran up, and they have not stopped since. All right, we see very little movement and certainly no downside. Now, there's a lot of reasons for that, and one of them is because we're forced into just the equity markets. But I think the other thing that you're seeing is that you've got a market that is being chased by greed. You have a market that is continuing to accumulate massive amounts of debt with no regard. Now, we just came through the holiday season where it's factual that people are spending, once again, more money than they're making. So what does that mean? Well, it means that we're just continuing to build debt. It means that you're going to see a reason that markets are going to have a correction at some point. But today, that reason is not evident. We don't know what the reason is going to be, and we don't know when to expect to start it. If you remember the theory that we talk about often here is that the markets don't announce themselves, then we should be very clear that we need to be very defensive in our trading strategy, but not try to say, well, this is the top. This is one of the reasons that we don't get out of markets. This is one of the reasons that we do not try to pick the top. This is the reason that we use protective strategies or methods to protect our portfolios so that we have the benefit to reach every possible plateau that we can reach within the markets without trying to predict. Because again, if you've gotten out already, it's hard to get back in here. So it's easier to try to stay in, and using some protective methods would help you greatly to understand that. But I think some of the things that we're looking at from a standpoint that could create some possible problems in the year 2018 is, first of all, the massive amount of debt. All right. And that's auto loan and student loan. Second would be the amount of debt that's being created to invest into the market. Now, remember, when you're investing money that you don't have, and when you're leveraging up money that you don't have, it makes it just that much easier to want to sell. Now, again, we have not had, nor can we predict an event that will create that fear model that will go ahead and push the markets lower. But it will show up one day, out of nowhere it will show up. And of course, all the people that were then just using the leverage to borrow and buy, and it was too easy, are going to find, and you're going to start to see them pull out. As they change the technical views of the market will have a little bit of a meltdown. But again, we can't get there without some purpose and some reason and a solid footprint that says. Because as you've noticed, the markets continue to just kind of drive quietly higher with no volatility and with no price volatility either, which is a very important thing. So we certainly can say that the lack of fear is the dominating factor of the market, plus the fact of the chase for yield. So if you tie those two together, that continues to try to push equities higher. But on a percentage basis, I think this is the second biggest week of all time. Now we've got the many theories out there that are based on, who knows what. Again, I'm not a big theory guy, right? I don't believe in all that crap. But at the end of the day, if we are up again on Monday, then there's like an 80% chance that the markets will be higher this year, and it would be double digits once again, which again, I'm not saying it's impossible. It certainly could happen. But as you look into the market, the last time we had this long of a bull market was, let's get a drum roll. I don't have those facts yet. Is 1991 to 1999. All right, we all know that was right. That was the dot-com era. Now, as we look at and go back and look into the irrational exuberance comments of Alan Greenspan back in that, well, he made the call in 95 or 96. The markets didn't actually bust until, after 2000. So the idea of trying to predict it out and say this is going to be it is all you're doing is you're missing opportunities to get involved. Okay, and I think this is something that is a problem that you need to focus on. All right. Because you just don't want to be the one that says that this is it, because our job is to make profit, not to be a prophet, all right? Now, you've got some major issues in some of the not local, but the states throughout. And they are leaving many of these states in exodus because of the ridiculous taxes that we have to pay, and Illinois would be one of them. And of course, I'd be gone in a second if I could. All right, there'd be no way that I would be living in the state of Illinois, but unfortunately at this particular time I have to, well, not unfortunately, but I need to be here. In the meantime, as soon as that reason goes away, I will no longer be in the state of Illinois, because again, to pay these ridiculous taxes so that the government here, the local government, can rip me off is silly, all right? And this is the same thing you're now seeing in many of the states, New York, California, and others, that people say, well, why do I want to pay such a premium to live here? Is there that much of a benefit? And of course, we've seen now California has now become a sanctuary state. And, so basically, taxes of the people of California are financing the illegality of illegal immigrants that are sponging off the healthcare system, sponging off many of the benefits, and taking jobs away from Americans. So again, I think that those are things that are major issues, that why would we want to pay for them as we continue to go through and watch these programs go into place. Now, the battle against what's going on is kind of sad when you look at it. When you look at some of the work that has been done by President Trump, bringing down regulations, bringing down things that actually make it a more business-friendly environment, I think you have to respect and say, hey, that's good for the economy longer term. Now, again, as you know, and I've made it very clear here, that I don't agree necessarily with the tax plan, because I'm not comfortable with the punishment, basically, that the small business is getting. I know that their taxes got lowered, but it still did not bring back the competitive balance that we need to see here. So when we look for that competitive balance, that's where I would like to see it. And I think that small business should be paying less tax than big business, because the small business has much more expense to actually operate their business, because the cost of goods, the cost of help, everything else down the line is more expensive. So to me, that becomes a much bigger deal. But in the meantime, it's still better in general. But what we're really starting to see here is we're starting to see the elimination of small business. And I think that's a sad state and a sad omen going forward, because this more goes into some of the conspiracy theories of how they're trying to wipe out a lot of these things. Because throughout all of this period, the wealthy have done extremely well. The wealthy have been basically on the Fed's payroll going through all of this. So there's a lot of things that are changing, but the one thing that has not changed is the power of equities, the power of the markets to continue to push higher. There is right now no news that seems to want to break down the markets, and that's the thing that you have to watch from a trading perspective and an investing perspective is, well, why is it that we don't have anything breaking down these markets and even giving them a 2, 3, or 4% sell-off? Again, we don't predict doom and gloom. That's not what we do, okay? We don't make ridiculous calls of why it's going to go down 80%. I'd read an article over the weekend, somebody had mentioned that will the Dow revert to mean? And that's very possible. That's more of a mathematical equation than an overall stock market question. But will it? Possibly. But remember, the mean will continue to rise, so at some point it may become make more sense that it will revert to mean. But you're seeing some very quiet issues starting to pop up that, again, may or may not create the sell-off that we all know is going to come, okay? But again, it could come from 25,200, about where we are now. It could come from 30,000. There's nothing to say that the market has to stop at this level, okay? There's nothing to say that the markets can't go and continue to go higher. There's nothing to say that the S&P can't go to 3,000 or 3,500. I don't believe that'll happen, but there's nothing in the way to say that it won't go there either. So I think one of the things we have to remember is that even though we might see some things that would be troubling, what would be troubling to me is the amount of debt, the lack of really good jobs, the participation rate in labor, the lack of those, real commanding, manufacturing, high-paying jobs so that we can get through. And then if you look around the globe, the overall debt to GDP picture is abominable. Okay, there's so much debt, and we're at levels that again cannot be sustained without more of the printing of money, which again then devalues our own currency. Now, if you think that everything is in great shape, well, just take a look at, let's talk about the farmers first. Okay, if we look at the farming community, right now we're getting ready for, to start another planting season, to get to bring in new product. And if they go to work now, they're going to be planting at a dramatic loss to start the year off. Now, I don't know how many of you out there would go into a new business or go into a business and know that you were going to lose 20% to start with. So knowing that you had to go to the bank to borrow X and then you're going to lose all this money going forward. I don't know, it doesn't make, again, it's another logic problem that we have to look at. But if things are so much better, why are grain prices at lows, not seen in 20 years, all right? With the exception of soybeans, all right? You've seen corn, which is at $3.50, take out the ethanol, is under $2. There's a lot of issues out there that don't make sense. And then you have people telling you that we don't have enough food to feed the world, but yet prices continue to tumble. So that's something that has to be looked at. If you look at just in commodities in general, and we're not going to talk about oil here because oil is being driven today by the fear in the Mideast. You have oil in what they call a backwardation formation, which is very simply means that June oil is cheaper than today's oil. Now that's the relationship was supposed to be inversed. So that doesn't tell us anything that's really solid, okay? So there are not a lot of great factors pointing out here. Then you tie into the fact that the gold is now continued to rally after hitting its low about 4 weeks ago. Gold has continued to push up and is now going to threaten the recent highs. But doesn't that say that maybe there's a little bit of a problem behind here? There's been no real impetus for gold to continue to go straight up at these levels. There's been a little bit of a problem. To me, it just says to me that somebody's got some underlying fear when we look at it. And when you look at some of the other asset classes, you've got, last week you had the meats fall a little bit. You had a lot of things coming down in price when basically in theory they should be starting to go up in price, especially if you base it on the relationship to the dollar. But you do have a lot of problems within Europe right now. We know that one of the most powerful people in Europe is going to lose a big percentage of her power, which is Angela Merkel from Germany. That's going to be a potential problem, okay? I think that, the big issues that are playing are politics and what can happen. And so although we're making some progress, I think those bring in a lot of problems. But we're going to step out here for a break right now. This is Bubba's Bottom Line, Todd Bubba Horwitz, and I want to remind you to check out highschoolinvesting.com. That is my program where I get, I help and put into high schools at my cost right now. We've got 300 high schools. We're starting our 7th year, and we're looking for some help. So if you want to go to patreon.com/Bubba Trading, that'd be great. And for those of you who do, in the year 2018, you're going to get access to highschoolinvesting.com itself. You'll get a username and a password. You can then play with the site and start to get some education on investing and see what the kids are learning. But if you go to Patreon, patreon.com/Bubba Trading, and want to help us out, great. We'd appreciate it. In the meantime, don't forget to get the Bubba Show every single day at libertytalk.fm, 2 to 3 Eastern Time. You can see the Bubba Show. And, of course, we'd love to have you there. And we're going to get back and get ready to go back into the show. Welcome back to Bubba's Bottom Line. Todd, Bubba Horwitz with you. And, of course, you know, we started talking about many of the things that are going on across the world, across the globe. And, you know, you've now got central banks, you know, starting to get in, not that they ever were not in, I don't know why I'm putting it this way, and we'll talk about this more in the commentary, but involved in the government operations. Of course, they kind of, you know, play off each other so that they can continue to skim the top, all right? And this is one of the big problems that, again, we refuse to address, is the devaluation, okay? This is the problem that, you know, the policies are giving us issues. You know, the monetary policies around the globe are kind of stupid, in my opinion. Again, that's opinion, but, you know, but I think, excuse me, I think you've got things to talk about, but I think this is one of the big reasons that now you see such a big move towards many of the cryptocurrencies. All right, now again, I guess there's something like 1,400 right now, but you've got a bunch of different theories behind the cryptocurrencies. But the first thing that we have to discuss here is that now the governments are trying to create some interventions into and taking away from what these cryptocurrencies are doing. Now, why are they so set against doing that? Well, because again, it does take money away from their Ponzi scheme that they have created, all right? But if you have, I guess my first question is, and I do not know the answer to this, but my first question is can they really regulate it? Because how can they regulate it? You know, if it is as private of a currency as it's supposed to be, how is it regulated? But there are different types of cryptos, and again, I'm not an expert by no means, but from my understanding, and I watched the CEO or whatever of Ripple the other day, and of course, they talked about their willingness and wanting to work with banks, okay? And you're getting some that are going to be backed by, like for example, there are some that are going to be backed by gold. And so what you're creating is you're creating basically what the dollar was, but something that I guess will be more real. But overall, I think that you have to look at these as they're going to be real and they're going to be spectacular, okay? My old line from Seinfeld. But I think that what we're really looking at here is a new revolution of cryptocurrencies against the governments that are continuing to manipulate and change their dollars. And as you see more economies get into trouble, I think you will see a bigger move into many of these cryptocurrencies. And don't kid yourself, okay? As much as the Jamie Dimons of the world tell you what crap it is, and as much as you hear the pundits and the economists tell you what a bubble it is, and it may be a bubble, all right? But a bubble and being real can be the same. You know, if we just look back at the dot-com bubble, okay, that was a bubble, but look what came out of it, you know, years later. So the pricing model right now, the pricing mechanism of the cryptocurrency may be a little bit out of whack right now, but don't kid yourself that it will not be real later on down the road. Because I think what you're going to see is some real acceptance. And I think the question will be is which one or which 10 will really become accepted. And again, it could be 100. Again, it might be 1,400. I don't know the number. There's definitely going to be, I think, some acceptance. As you may have heard on the Bubba Show, I interviewed the world's first cryptocurrency bank. And I think when we look at what's going on with many of these things, I think that you can see the way that it works out. I believe that when you look at the picture, you know, and every, you know, the first group is always out to say, well, it's for criminals only, okay? And I go, well, it could be, but do criminals not work in all kinds of currency? Do they really care? Are they just trying to convert it? They're trying to launder it some way or the other. remember one thing, the criminals will always be ahead of people that are following the law. So I can't worry whether or not the cryptos are for whatever they're for, all right? I think that you're going to see that they're real and they're going to trade and they're going to be worth value. You know, when major companies are taking them, okay, and using them as currency as well, we use overstock.com and many of the others, then that you should say that it's real. Now, we've got exchange trading Bitcoin on the CME and the CBOE, so that gives some credibility, and there's going to be more. You can bet that there's going to be more products on this market, and you can bet that there's going to be more exchanges that are going to be involved in this. Why? Because again, they are at least recognizing the hunger or the thirst for alternatives to having your dollars stolen from you by somebody at some central bank deciding to intervene. Look at the assets that are controlled by the governments that are they're bigger than whatever. The trillions of dollars, there's more than the net worth in the entire world. And I think this is something that we have to identify and recognize, that you can't let the markets continue to create money that doesn't exist. And I think that's where these cryptos are going to start to come into play as we go forward, because of what they are and what they represent. And in my eyes, they represent a financial revolution. In my eyes, they represent people trying to take over their own lives now and not be so pounded down by what the governments and everybody else can do. And this is going to be, I think they're really going to start to take off, if they haven't done so already, in many of the communist countries and many of the places where you don't have as many freedoms. And think about it, in some of the countries where their currency has collapsed, don't you think those people would rather have Bitcoin? Now, I think that you have to look at this for what it is, and it's a new form of payment, and bet your sweet potatoes that it's a currency. Okay, again, you can listen to all the experts on TV tell you that it's not. Anytime somebody accepts it for payment, it's the same as a currency. So I do think, though, that at the current prices and where it's at, if you've got some huge profits, you probably should take a little bit off the table, just because. And not because I'm worried about it, but again, nothing goes straight up forever and nothing goes straight down. I think that you're going to see more institutions involved in this cryptocurrency. You know, this whole pattern, okay, Ripple wanting to work with banks, Bitcoin, which is a popular one that everybody knows about, but then there's many other little ones. And I think one of the problems with Bitcoin is the time it takes to finish a transaction and the cost of making a transaction. You know, I did some, for the first time ever, I did some trading, well, not really trading, I did some buying, right? I bought some different cryptocurrencies, and full disclosure, I bought BitShares, and I bought, I did buy some Bitcoin, because a lot of these exchanges, you have to use Bitcoin to trade with. So at the end of it, okay, you know, I didn't buy a lot, and I'm not recommending anything, okay? I just want you to know that I am starting to play with it a little bit, because again, I was a non-believer, and I became a believer because I understand it better and what's going on and why it should work. And again, it goes back to the technology of blockchain and being able to have a clear view of basically a general ledger to see what's going on. But again, this is to me more of a revolution, all right, than anything else. And I think that what you have to understand about this world is that people are going to use it. And you're seeing it throughout a lot of services that they prefer to get Bitcoin. And in fact, they give you discounts and bonuses on Bitcoin. And this is where you're having a separation. And this is very much like the election we just had, where President Trump won. This is what we don't do it that way. We've never done it that way, so why would I start now? And I think that is something that you have to take a view of. And again, I'm begging you, don't take everything and go buy it, but you can have a small representation of some in your portfolio. And I think many of the smart advisors are out there saying, hey, if I take 2, 3, 4% and I go ahead and put it in these cryptocurrencies, yeah, they could lose and they could go down. They might be, listen, they could be phony. I'm not saying that I'm not giving you they're great, they're this or that. I'm giving you the fact that from my point of view, the markets are rebelling against the central governments, against the central banks, and saying, hey, we want an alternative that nobody else can control. We want an alternative that actually really trades 24 hours a day with no manipulation. Okay, we want to have these things happen to us. So I think as we go through 2018, we see more value in these as governments try to fight more and try to create more regulation against them. I'd like to see how they're going to get that done, but I think that for the year, it's going to be a reasonable spot to look for movement to the upside. And you might look at, you're going to have some real volatility here. So again, I'm telling you, if you do get in, to get in very small. And I'm telling you, if you don't get in, not a problem. But I want you to understand what I believe is happening throughout them, okay? And it doesn't matter whether you get in them or not. It's just something that is happening. And again, nobody thought, well, you know, in 1776, things were going to happen. Of course, look what happened. Look where we are today. So I think this is just an economic revolution, a money revolution. And I think this is just the start, and I think it gets a lot bigger. In the meantime, we're going to step out here for a break and come back with my commentary after the break on Bubba's Bottom Line. And again, just a reminder, highschoolinvesting.com. That's my home where I help educate our youth, and hopefully we can get past all this so that they can live a better life. And I'm just looking for some help as I do all the financing and funding myself, and that is at highschoolinvesting.com. You go to patreon.com/Bubba Trading if you'd like to help out. That'd be great. Don't forget to get the Bubba Show every day at 2 to 3 Eastern at libertytalk.fm. And let's get back to the show. And, you know, welcome back to Bubba's Bottom Line. And, of course, every week I do my little bit of a commentary piece. And I don't know, it's so easy to pick on the Fed, but why not? Let's go for them another week because it is so easy. And, you know, last week we had the Fed minutes come out and we had the jobs number. Now, in my opinion, the Fed will never get it right. They've never gotten it right in history, so why would I expect this time to be different? But on the other side of the equation is already they're panicking and puking, all right? And if you remember, you know, Billy Ray Valentine from Trading Places, they panic, and I feel it, the panicking out there. And again, really what I'm talking about is because of the weak jobs number, already they're talking about, well, maybe we shouldn't raise rates so fast. Let's go from 3 to 2 now. And this is the new talk. And that's something that I said as I was trading the jobs number live with my future students. I said, don't kid yourself. This number looks bad, but it's probably a good number. Why? Because again, the investors, the traders know that the Fed is probably going to do what they did, which is, hey, maybe we shouldn't raise so fast. We have to remember that this stock market rally is driven 100% by the cheap dollars of the Federal Reserve. That is what has allowed the corporations to have better earnings. It's not stimulated the real growth that we need in this country, but stimulated the growth of dollars by letting companies get cheap money and buy stock back. So the manipulation, the Ponzi scheme that is being run by the Fed, okay, legalized Ponzi scheme, that is being run by this group, is being created into a much bigger ordeal. And a problem because what's going to happen, rates are going to get away from them. Rates are going to rise much quicker than they want because that's always what happens. And there's going to be some major issues and major problems. That will probably be, if not something before, will be the black swan event. But as long as they have the control and can continue to manipulate this system, this monetary system, and have the help of every other central bank around the world, all right, that want to create more of a socialist environment than the true capitalist environment, this is what you're going to see. And this allows the wealthy to create more benefit and not help the middle class. This is why the tax plan is bad, the carried interest is bad, and this is why the Fed should be non-existent. But of course, the reasons behind the Federal Reserve are the same reasons you now have the cryptocurrency revolution that is bringing things forward. And this is the problem when you have economists in a glass house who couldn't find their way home if you dropped them off in the middle of nowhere because they have no common sense, will now create the same problem, which will actually, I think, buoy or continue to push forward these cryptocurrencies. But until they quit what they're doing, that is why you're seeing some of this ridiculous price movement. And of course, as long as they can keep control and manipulation and try to fight against the alternatives, they will try to keep the money cheap. But of course, it will get away from them, as it always does. And 10 years from now, you're going to say that this period of time was a bubble in equities, not necessarily a bubble in cryptos, but it could be a bubble in both. But there is a bubble in equities. But again, there's no time or frame that can say that the bubble has to pop. And that will do it for today's Bubba's Bottom Line. As always, I thank you for being a part of the show. And if you get just today, we got football, had 2 big upsets in football on Saturday, and on Sunday's football, we have got 2 selections for you, because we got to give out football games, right? Actually, we're going to like the 2 underdogs again, plus the points. I don't think we'll see the 2 underdogs win straight up, but they could. We like the 2 underdogs. In the meantime, everybody have a great week. We'll see you tomorrow on Bubba's Daily Update, and we'll see you next week for Bubba's Bottom Line. Thanks, everybody. I appreciate you all. Have a great week. This is Bubba's Bottom Line. Take care.